Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, August the 3rd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We've had PMI, which is Purchasing Managers Index, on the service side across the pond and here in the United States, and they're all actually looking pretty decent. We had Spanish PMI come in at 54.1, just slightly below the expected. We had Italian services PMI come in higher than expected, just slightly. French PMI, final services, came in line with expectations, as did the German final services PMI. Here in the United States, one other thing, retail sales in Europe was in line with expectations. Here in the United States, we had ADP non-farm payroll come in at 179, which was higher than expected of the 171. So that payrolls number means that those are hires that happened. That is a precursor to Friday's unemployment number, or as we used to call it on the floor, the unenjoyment number. It comes out the first Friday of every month. That one's the one that is really looked at more so than the ADP number. Then here in the United States, again, we had the final services PMI come in at 51.4, just slightly above the expected 51.0. And then the non-manufacturing PMI came in just slightly lower than expected at 55.5, but higher, it was expected slightly higher at 56. Now remember, all of those PMI numbers, anything above 50 is expansion in the economy, and pretty much everybody came in just slightly above that 50 number. So that is showing expansion in the economy, and for the most part they were better or as expected. So the overall equities haven't really reacted a whole lot to that. One thing that we did also get was crude oil inventories. Was expected a drawdown of 1.6 million barrels, came in as a build of 1.4 million barrels. So continuing to see that increase in crude oil inventories. It actually did start crude oil selling off after that number, but we have since recovered and pushed back above that $40 a barrel area and above, more importantly, the Fibonacci level that I was looking at, thinking we were going to come down and at least test this value area low. Still not out of the woods yet, but I'm going to have to start really rethinking this strategy. I got short crude oil probably a little late in the game. I was short earlier on, covered it a little early, but now if we settle above yesterday's high, I'm going to really start looking to maybe cut my losses in XOP. XOP has pushed above the previous day's high and is looking to settle up there, but as you can see here, I'm not looking good on that trade and may just cut my losses rather early. Crude oil up $1.28 at $40.79. That is one of the few, crude oil is one of the few markets that's actually up on the day. We have gold futures here right now, down on the day, down about $9 and trading at $13.63. So it may be getting a little long in the tooth up here. This has been a real resistance area to get through. May look to add some shorts in gold. On to bonds, again, down on the day, down about 10 ticks. Looks positive on this chart here, but that's just from the opening. We are slightly in negative territory. And then on to the NASDAQ, down about 3 points on the day, but unchanged for all intents and purposes. Still yet to be seen whether or not we are going to come off anymore. This is an inside day, so it's not really an indication of anything. If we settle right here, it's just kind of a lack of interest going on right now. You know, the overall markets are trying to decipher whether or not good economic data is bad for the overall equities, because if we start getting good economic data, that's going to increase the probability that the Fed is going to raise rates. So the equities could be thinking about throwing a bit of a tantrum heading into that. We got E-mini S&Ps pushing just higher above on the day. It was just slightly in negative territory when I first started out, but as you can see, we are up 1 point on the day. This is a breakdown of the E-mini S&P chart /ES on a 15-minute chart, and as you can see, it's just been a battle back and forth, not really going anywhere, and as you can see, we have a nice inside day going on. A couple of trades that I've done, a few days ago, I got long BBBY, Bed Bath & Beyond, which is the ticker symbol BBBY, and this was off of Steve Primo's PET D strategy. It got taken out to the downside, so I decided to flip because the PET D is showing a sell signal. I'm hopefully not going to start getting whipsawed around in here, but in BBBY I had the long September 45 calls that I originally paid $1.59 for, got out of those for 80 cents, and then like I said, I flipped and bought the September 42.5 puts for $1.30. So we'll see. I did that earlier today, and the market really slammed down, but has made a pretty big comeback. So right to that point of control. So hopefully we can get a bit more of a sell-off coming back, but that doji does not look really good to me right now. So may just cut my losses on that too. On to the CVS trade. This was an earnings trade that I had done a strangle around. I already covered my puts for basically nothing, but I still had on those August weeklies that expire on the 5th, which is Friday, and rolled those out in time, keep that dream alive, and went into the August that expire on the 19th, which is the monthlies, and was able to roll that out for a credit of 72 cents. So that increases my break even by a little bit. So now if we can get down into the 96-ish handle, that should be a really good trade. So that's what I'm looking at for that one. That's about all I've done today, because I'm saving a lot of margin for, we've got Tesla coming out, which is going to be a big margin when we have HLF, which is Herbalife. RIG, probably not going to take anything in that. We also have First Solar, which is ticker symbol FSLR, Apache, Chesapeake, Kellogg, Priceline, and MGM. So quite a bit of opportunity there for the earnings trades. I'm not going to take all of those. I'll probably take hopefully 4 of those, maybe 5, depending on what the premiums are going to be giving me later on in the day. So if you follow me on Twitter at Wolfman's blog, I usually tweet out what I'm doing in those, whether I'm doing a strangle or something along those lines, and it's going to be wrapped around my earnings trade webinar. So if you don't know all the rules and the details that go into that, go to protraderstrategies.com and you can find out more about that. And I will talk about what I've done in those tomorrow and how I'm going to either defend or cover those for a profit. All right? That's all I got for you guys today. If you can't take that, take it easy.